Welcome to the fourth and last session of our virtual 2021 ACCIS Annual Conference. My name is Enrique Velázquez, Director General of ACCIS, the trade association that is the voice of the credit information industry in Europe. Artificial intelligence has become a powerful driver of social transformation. It is already reshaping individual lives and business interactions. AI brings significant opportunities for development, sustainability, access to finance, but also raises specific challenges: unemployment, discrimination, exclusion. Without losing the focus from the bigger picture, what is artificial intelligence? How does it work? Why does it matter? And what should we do about it? In today's panel, we're going to debate about the use of AI in lending and scoring. Take machine learning. Machine learning essentially means teaching computers to teach themselves by giving them access to lots and lots of data. Thanks to machine learning algorithms, an AI system will teach itself which data points are important and which ones are not for a particular lending decision. So we will debate with you today whether AI is outperforming traditional scoring methods and whether that performance can be explained. As you know, this session takes place against the backdrop of the publication of the proposal from the European Commission on an AI Act, the first set of comprehensive harmonized rules on AI worldwide. We'll touch upon those rules too. To debate over this topic, we have invited a selection of AI experts, consumer representatives and policymakers, including MEP Marion Walsman, that is with us today. Two experts will kick off our debate, each presenting a case study for 10 minutes. I will then invite the additional speakers to provide their initial views for 5 minutes each before we open the floor for your questions. Some additional information before we begin. We would like to have a session that is as interactive as possible. You can do two things, and both happen at Slido, a tool that you can find on the right-hand side of your screen. Use it to send questions. I will ask them on your behalf to the speakers. Use Slido also to respond to polls. We have 3 for you today. One is already loaded on the tool. It reads, do you feel like you understand the basic concepts of AI, machine learning, such as reinforcement learning, neural nets, deep learning, clustering, etc.? And you can respond, yes, I have a great working knowledge of the basic concepts and terms. I have a vague sense what they mean. I've heard the terms, but don't really understand them, or no, not at all. This poll will stay open for the next 10 minutes or so. One more thing. This is an open event. Please post about it in LinkedIn and tweet about it. It would be great if you could use the hashtag ACCIS Conference. Before ending these remarks, I would like to remind my speakers to stick to time and help me ensure that we end at 12:30 Central European Time. I will now introduce our first speaker. His name is Federico Sembolini. Federico is lead data scientist at Equifax Iberia. A few years ago, Federico gained a PhD in astrophysics and collaborated with the European Space Agency. Then he got bored of watching the stars and moved on to the equally fascinating world of credit. Federico will present a case study on NeuroDecision, which is a fully explainable AI to boost financial inclusion. Federico, the floor is yours, please.
Thank you, Enrique, and good morning to everyone. So my presentation today will be focused on the use of artificial intelligence for credit scoring, and in particular, I will focus on why we need to use fully explainable AI in this context, and how this can benefit for consumers and can help boosting financial inclusion. So if we can go to the first slide. So when we talk about the use of statistical model for credit scoring, this is not something new in the market. We know that analytical models, such as the logistic regression, has been now used for decades to assess creditworthiness. So it's something that both consumers and lenders know very well. Usually, analytical models are used to predict how likely it is someone to will pay back a loan to assess the financial exposure. So why do we want now to take a step further and starting using machine learning for this kind of problems? We know already, it's very well known that machine learning models can make can make more accurate predictions that the traditional models, like the logistic regression, and so they can help the results and give a better score assessment. If we have and use more accurate models, more consumers will have access to credit, so they will be protected from overexposure, and we will improve financial inclusion. Basically, if we use machine learning, we have more consumers have access to credit, and we protect them from over-indebtedness. So this can be very important right now, considering the times that we are living. We are in the process of recovering from a pandemic, and we want the consumers to have more access to credit because we want to help them recovering from the financial condition that the pandemic led us to. We are also moving towards a more sustainable world, and reducing financial inclusion is one of the main objectives of the 2030 Agenda of the United Nations. Furthermore, we also want to bridge the gap with China and the United States in the use of artificial intelligence, and we want to do it respecting our European values. So we want to do it being open to consumers and protecting them. So what is the challenge in this context when we want to apply machine learning to credit scoring? We want to make both consumers but also authorities happy. So we want everyone to be comfortable in using machine learning for credit scores. And the solution is to use fully explainable artificial intelligence. So we want to use a kind of machine learning algorithms that have been modified to remove the black box effect of that usually machine learning models have. Sorry. So if you can move now to the next slide. So what are the main challenges that we're facing when, if you want to use machine learning for credit scoring? We can start considering the pros and the cons of machine learning and of the traditional models of such, for instance, logistic regression. When we use logistic regression, we have a very simple model and that is fully explainable, so it's very easy to control. Imagine that we want to draw a straight line and we want to distinguish between those consumers who will be able to repay a loan and those other consumers that may struggle to do it. So in this case, we have a model, as I said, that is very easy to control, it's very explainable, but the price that we may pay is inaccuracy. As we don't have much flexibility, we may be excluding from access to credit consumers that would have been able to repay it. Or on the other side, we may accept someone that then would be overexposed and have a struggle to repay the loan. With machine learning, we are in the opposite context. We have models that are more complex. So it's like we are not drawing a straight line anymore, but we have more flexibility. It's like drawing a curved line and doing as many turns as we want. So we have better predictions and we will accept more consumers. What is the price that we're paying in this context? That, as I said, the models are more complex and we may lose control. So we may take a decision and then it would be difficult to explain that in a not technical way to consumers. And we know that we want consumers to have the right to understand, even if they don't have a technical knowledge, why a credit decision has been taken, especially if the credit has been denied. So this is what we call the black box effect. So the benefits of using machine learning is that we have better models in terms of accuracy, but then we have much less control. And also we can have some decision that doesn't follow a business logic. So it's something that it's actually difficult for everyone to understand. So I use the term explainability a lot already. So I want to say what explainability means in the case of credit models. It means basically that for every model that we use, for every variable, sorry, that we use in the model, we want to be able to say whether its impact in the final score is or strictly positive or strictly negative. Let's take, for instance, let's make two examples. If I repay the bill of my credit card, the impact on my final credit score must always be positive. So if I pay the credit card, my score increases and my probability of being accepted if I ask for a loan or for access to credit has always to improve. On the other side, for instance, the number of loans that I've already requested in the last 6 months must always decrease my score because the more financially I'm exposed, the higher the risk I have to do default. So the impact must always be negative in the score. When we use a logistic regression, so a traditional model, this is very easy to assess and to explain. So we have fully control. When you use a black box model, we may lose control about this. So we may find us in the position where these variables have an impact on the score that we are not able to explain, and hence the problems of using machine learning for credit scoring. So of course, this is a known problem in the world of artificial intelligence. Not only explaining machine learning models is not only interesting for credit scores application. So in the last years, the scientific community has developed many valid solutions to partially explain artificial intelligence. For instance, they developed the use of proxy models. Basically, we developed simpler models, such as logistic regressions, that try to approximate and explain the more complex black box model. There are also some more complex techniques like Shapley values, but I don't want to go into technical details today. What is the problem with these techniques anyway? That they're very good from a scientific point of view, but they're still approximations. So we apply these techniques to the model after it has been developed. This means that we can find good explanations, which are valid for more of the consumers in our case, but we may find cases for which the explanation given by an approximation is wrong. What does it mean? Let's make, again, the example of paying the credit card bill. We develop a black box model and a partially explainable model, and we apply some techniques like a proxy model to explain it. We find, for instance, that for 90% of the consumers, it's true that paying the credit card bill has a positive effect. But what happens for the other 10%? For these 10%, for instance, paying the credit card may have a null impact on the scores. So the result may be that we are giving to these 10% a wrong credit recommendations if you use this kind of approximations. That's why we need to use fully explainable AI. What is the difference with fully explainable AI? That is an approach that we are using at Equifax to find a solution to this matter. Basically, we modify the algorithm before we modify the algorithm, to make it explainable. So we don't use any approximation to explain it, but the algorithm itself is being thought to be explainable. In our case, we developed a NeuroDecision technology, NDT, which is a fully explainable model. So we don't need any approximation. We can use a machine learning without the need of any approximation after developing the model. Now, I want to be technical just for 1 second to explain you what NDT is. NDT is a two-layer neural network which has been modified in order to be fully explainable. So we modify directly the algorithm, and we don't need any explanation technique applied after. So what does it mean that NDT is fully explainable? That every variable that is included in an NDT model, it is possible to say if its impact on the final decision, on the final score, is strictly positive or strictly negative. And this will be valid for all consumers, for 100% of consumers. So for every variable that enters the model, we will always say that for all consumers, for instance, its positive is its effect is positive. The higher the value of the variable, the higher the score. Can we go to the next slide, please? Okay, so we want to see now how this works with real data. So NDT is already being used in the United States in production for credit score models. And in Europe, my team and I, with Equifax, we have been leading the use of NDT for several proof of concepts with tier 1 European banks. So in the case study that I want to show you today, we use the historical data from a consumer credit model using real data of Austrian and Danish consumers. So we are using real data that had already been using in a traditional model by one of the top banks in Europe. In this case, the objective of the test, of the proof of concept, was to compare which model was better at predicting consumer default. So traditional model based on logistic regression, what we call partially explainable AI, maybe, for instance, XGBoost, random forest, unconstrained neural network, for who is more familiar with machine learning. and NDT, a fully explainable artificial intelligence model. For all these models, we used the same data. So the same data that were used by the bank to develop the original model based on logistic regression. I want to clarify this not only because we use real data of consumers, but also because one of the doubts that we use consumers usually have for the use of machine learning is that we may need extra data that are not as trustworthy as credit data. Let's think, for instance, of social media data. In this case, we didn't need any of that. NDT only, but also in this case, also the other machine learning models. In the case of credit scorings, we can use the same data that have been used for decades with logistic regression. So which were the results? We found that NDT is more predictive than the logistic regression, so that traditional models, and has the same level of accuracy that machine learning algorithms. So we have something that it is as explainable as the logistic regression and is as predictive as a machine learning model. So as models with not explainability. This means that fully explainable AI can help consumers to have more access to credit and at the same time to have full control on the model and get a fair explanation on the credit decision. So you can see clearly the benefit for consumers first because they have more access to credit and also they can understand how the credit decision has been taken. We also proved in this case that NDT for every single consumer that was in the data set that we studied, for each consumer, as in the case, for every consumer, as in the case of the logistic regression, we were able to explain the decision. So the variables that we use always have a business logic, and this was valid for every consumer in the portfolio. On the other hand, for machine learning models, for the other AI models, we found that we could identify some cases in which the model had taken to a wrong decision. So something that it was not possible to explain from a business logic perspective. Okay, we proved now the benefits of NDT with consumers and lenders. We want to take it to the next step and show the results also to the authorities, to the regulator. NDT has been accepted to participate in the first session of the Spanish regulatory sandbox. Regulatory sandbox, if you don't know, is a virtual space controlled by the government and supervised by the Bank of Spain. So this means that we can show now, both to the regulator and consumers, the benefits of innovation in credit scoring, and in particular, the benefits that fully explainable AI can bring to the market. So just to bring me to my conclusions, what did we learn during this journey? We see that both consumer and lenders can benefit from the power of artificial intelligence because this can give us more accurate models. So it can bring financial inclusion. More consumers and more business can get affordable credit. On the other side, also financial entities, the borrowers are better protected from overdebtedness because they can accept more consumers, keeping the risk low, the risk level low, sorry. And the solution for all this is using fully explainable AI. So when we use machine learning, the risk that we have is that we lose control on the model. So we won't be able to explain in a language understandable by humans how the model works, and this may take to wrong credit decisions. In the case of NDT and in general of fully explainable AI, we can remove the black box effect, so we can have models that are more predictive and at the same time have the same level of explainability that we have been seeing in the last decades using logistic regression. Thank you.
Thank you very much, Federico, for your presentation. I was going to say that basically my takeaway is what you said at the very end, that we can harness the power of artificial intelligence to make creditworthiness models more predictive than traditional models. And I understand from you on a par with partially explainable models, but that the beauty of the solutions that you have put forward is that this model is also able to make it possible to explain every single decision. So that's interesting innovation from your side. We are going now to close the first question that we had posted for the audience to respond. I don't know whether once you have listened to the presentation, you may want to go back and change your vote. It had to do with the understanding of the basic concepts in connection to artificial intelligence. So that one is now closed. And I am going to immediately, before I move on to my second speaker, to launch the second question. The results of the questions we will, of course, later on inject in the discussion. The second question goes, when you read about AI and some of the related risks, privacy, bias, inequality, safety and security, what best describes your response? It worries me. It worries me, but I think we can handle the issues as they come. It does not really worry me. AI is such a great benefit to the human race, or I don't know what to think. And this second poll will stay open until we complete the presentation of Mesrur, which is now the person that I am moving on next. Mesrur is joining us from Mesrur Boru is joining us from Turkey, and he's a senior data scientist with Tazi AI. Before joining Tazi AI, Mesrur already had a long experience working as data scientist and investment and business development executive for several asset management companies. So also a very highly qualified expert on the topic at hand. Mesrur will introduce a case study on customer retention using next generation auto ML. You will also, I think, provide a testimony from a client. So we very much look forward to that, Mesrur. The floor is yours.
Thank you, Enrique. By the way, I cannot see the slides now. Okay, now I can see it. Thank you. Hello, everyone. So today I'll be talking about customer retention using next generation automated machine learning. And first, we'll talk about what do we offer as Tazi, what it takes to be a next generation automated machine learning platform. And then we'll talk about a customer retention solution that we developed with our customer iş yatırım and analyze why this solution was successful, and then talk about explainable AI and continuous learning AI. So next slide, please. At Tazi, we offer complete solutions, complete and easy to deploy solutions using our automated machine learning platform. And as a machine learning platform, we offer, we service to the leading companies in different industries such as insurance, finance, retail, FMCG, and healthcare. We can move on to the next slide. So what makes Tazi different? So basically, first, we offer continuous learning. Continuous learning means that your models are self-updating. So as the data flows, they continuously update themselves regardless of the frequency of the data. So data may flow in milliseconds, seconds, or days or weeks. It doesn't matter. Your models are self-maintaining and continuously updated, continuously learning with the new data. And we also offer explainable AI. Our models are understandable and actionable. And Tazi as a platform is a no-code and easy-to-use platform. It can be used by business users, novice data scientists, or experienced data scientists as well. And also users can interact with the machine learning models. So the machine learning models at Tazi can learn from human too. So these are the reasons why Gartner selected us as a cool vendor in 2019, and Tazi is labeled as a next generation automated machine learning platform. We can move to the next slide. But why do you need a next generation automated machine learning platform? Well, because recently the expectations from AI is growing. Now we want AI to follow regulatory requirements. We want AI to mitigate risk. We want AI models to be ethical, transparent, responsible, and we want to use AI for safe decision-making. At TUSI, we address all these issues by offering tools for data validation, visually interactive machine learning model explanations, dynamic business user dashboards, continuous monitoring of business KPI and optimization, and continuous updating of the models. So with such a complete product, with such a complete solution, we are rising up to these expectations. So we can move to the next slide. So from now on, I'll be talking about the customer retention solution that we developed with our customer Iş Investment. Iş Investment is one of the leaders in investment banking at Turkey. They've been operating for 25 years, and they offer a wide array of services in the fields of corporate finance, investment advisory, asset management, brokerage, and research. And we've been working with them for almost 2 years. And as I mentioned, developed a customer retention solution that helped them to decrease their churn rate. So we can go to the next slide. So let's talk a little bit about why do we need a customer retention solution in investment banking, an AI-based customer retention solution. So we all know it is harder to acquire new customers compared to retain the existing customers. And in finance, especially in investment banking, the competition is so high that it is even harder to acquire new customers. So you need to stick with the existing ones. And the whole industry is focused on stock market. And this means that ever-changing patterns in stock market continuously changes how customers behave. Customer behaviors continuously change. So this is why rule-based customer retention systems fail from the start. So you need an AI customer retention solution, that's for sure. But also this solution, in order for it to work in the long term, this solution should be explainable, and also it should be adaptable. It should have continuous learning. So we can go to the next slide and talk about why we need an explainable AI solution. So first, explainable AI provides transparency towards senior management and regulators. So in order for AI to follow regulations, we need to have explainable AI. And also explainable AI helps business users to understand and then trust the machine learning models. Because if business users do not understand how a machine learning model decides, they do not trust it. And if they do not trust it, for sure, they do not use it. And the whole solution basically doesn't work. And lastly, these explanations provide a really solid ground for business to create strategies to increase customer retention. Well, because let's think about it. If you have a black box model and your model just says, okay, this customer is going to churn with 90% probability. Now you know that this customer is going to churn, but what can you do? Because you don't know why this customer is going to churn. But when you have explanations, you understand why this customer is going to churn, and then you can develop strategies. You can offer campaigns. You can offer discounts to retain this customer. So that's why explainable AI is really important. We can go on to the next slide. And with the explainable AI, we also need continuous learning. We need adaptable models. Why? Well, because external factors continuously change. Especially in investment banking, economical factors continuously change, and this affects the customer behavior. And basically batch models, the models that are trained for once and then deployed and just making predictions with no updates, they fail to capture these changing patterns, and after a while, their performance drops. Even if we have a really stable economy, economic factors does not change. Even in this case, we internally change how customers behave. Well, because when we know a customer is going to churn, we develop strategies and offer this customer campaigns, offer discounts, and then maybe retain this customer. Basically, we change how this customer behaves. And again, batch learning models, since they are not updated, cannot capture this change in customers' behavior. So in this case, again, you need an adaptive, continuous learning algorithms. And lastly, and unfortunately, most of the time of the data scientists are spent on updating and maintaining existing models to keep them performing on top. But when you have a self-maintaining continuous learning model, their performance never drops, and you do not need to retrain them. You do not need to spend time to maintain them. So data scientists can spend their precious time on focusing on new projects. So that's why we also need continuous learning in a customer retention solution. So we can move to the next slide. So with such a complete solution package, Ethereum was able to develop business strategies using explainable AI. They captured the changing patterns in customer behavior even during COVID. And also they built a solid employee performance evaluation system based on this customer retention solution. And with this approach, we were able to decrease churn rate by 15%. So now we're going to share a video with you, and so you can hear these from our customer. So we can share the video now.
Hello, I'm Nehir Güncedaşçı. I'm data scientist. Hello, I'm Nehir Güncedaşçı. I'm data scientist at ACCIS Investment in Turkey. Previously, I was credit analyst at another bank. Now, I'm also mentor at Data Science School. When I started to work at ACCIS Investment, it has already partnered with Tazi in order to focus on our customer retention rate. Within 6 months, we were able to achieve 15% growth in this ratio. Besides model explanations, Tazi provides us data explanations by Profiler tool. This interactive data validation tool helps us continuously check the quality of our data. Profiler data scientist recommendations helps cleaning and processing the data. We are now using Tazi for other AI solutions. It is easy to use and also easy to understand. This has allowed our business teams to take readily advantage of AI.
So finally, as I mentioned at the beginning of the presentation, Tazi is an automated machine learning platform with explainable AI, continuous learning algorithms, and also can learn from humans. So with these properties, Tazi is a platform where you can solve any type of machine learning, any type of business problem, not just customer retention. So that's why we provide solutions to a wide range of industries. And in finance, besides customer retention, we also develop solutions for credit risk detection, non-performing loan recovery prediction, money flow detection, and propensity score prediction. And we can move on to the next slide. And also credit card copying fraud detection, check fraud prediction, and stock market prediction, profitability monitoring, and debt recovery prediction. So yeah, as I previously said, using Tazi, you can solve any type of machine learning problem. And we can move on to the next slide to conclude. So thank you for attending and listening. If you have any questions, or if you want to contact me, or just to say hello, you can contact me or Sandra Lopez from the emails that you can see on the slides. Thank you.
Mesford, for your case study. What I took away from your presentation is that explainability is not only an external regulatory requirement or a platform to engage in conversation somehow with consumers. It is very much a management tool, a business management tool in itself. And that is something that is not often highlighted in the discussions that we have. Thank you also for providing the testimonial on customer retention. When I was listening to that, I was thinking, it's interesting from an association's perspective to use AI to also try to retain our members and to make sure that they are still around in the future, and what type of services and expectations they have. And we have certainly a number of associations representatives in our audience. Okay, what happens next? Before I move on to the next three speakers, I am going to first close the second poll and launched the third and final poll, which goes like this. Consider the idea that if AI denies you a loan, you have the right to know why. Okay, check all of the following that you agree with. Giving borrowers the right to know why a loan was denied is good practice. Giving borrowers the right to know why a loan was denied should be in the law. Hey, it should not be possible for AI to deny a loan. It would limit the advancement of AI if that would have to be the case, or it is technically not possible. So these are the options that you have. You can check all the ones that you agree with. With this poll, of course, we try to look at a practical application of the discussion that we were having earlier this morning. You have around 50 minutes to respond to that poll. And before I move on to present the three additional speakers that I will present in one go, I like to perhaps, if I can, see the results of the first poll, which is the one that was basically checking up to what extent you were familiar with some of the AI concepts and terms, because I think that is important perhaps for the upcoming speakers to take into account. So I think it's a very, I would say, level response. 30% of the people do have a great working knowledge of AI. So we have 30% in the audience that know what we're talking about. 33%, which is in fact the winning option, have a vague sense of what those terms that I described earlier mean. And 30%, they've heard the terms, but they don't really understand them. And then 7% know nothing at all. So 33 is the winning option. People have a vague understanding of what some of the key terms in AI mean. Okay, now on to my three additional speakers. As I said, I'll introduce you all together, and then I'll move to one of you separately. We will begin with Deborah Fauré. Sorry. Deborah is Financial Services Officer at BEUC. BEUC is the largest and most representative European organization representing the interest of consumers, including on financial services. Deborah has a specific focus on the retail banking sector. She's a qualified lawyer and holds a Master of Laws from the University of Cambridge. Thank you, Deborah, for being with us today. In second place, we will be listening to Dr. Jirgi Kaneci, Data Science and Analytics Research Group Lead at the University of Tübingen, and also Chief Technology Officer at the Germany's SCHUFA, which is the largest credit reference agency in that country. Jirgi holds a PhD in graph-based mining and retrieval. Jirgi can contribute to industry and academic perspective on the topic, which I think would be terrific for this discussion. Finally, we will hear from Ms. Marion Walsmann, a member of the European Parliament from Germany. Ms. Walsmann is Vice Chair of the Committee on Legal Affairs and a member of the Committee on the Internal Market and Consumer Protection. That is the lead committee on the AI Act. She is also a substitute on the Special Committee on Artificial Intelligence in a Digital Age. Importantly, she was the rapporteur of an opinion report on shaping the digital future of Europe that looked at removing barriers to the functioning of the single market and, importantly, improving the use of AI for European consumers. Ms. Walsmann, thank you very much for being with us today. Now, if I could turn to Deborah. We have already heard a lot about the benefits of AI. So from the consumer perspective, do you agree with these benefits? Do you see risks? How do we effectively protect consumers from AI risk? What are your key messages, Deborah?
Thank you very much, Enrique, and thank you for inviting me to this very interesting conference, but also a topic which is very important from a consumer perspective. So I want to start on a positive note by stating that in theory, AI has the potential to deliver better, quicker and fairer outcomes for consumers, including lending outcomes. And a recent survey conducted by Book and by several of our members has found that a large majority of consumers expect AI to help with predicting financial problems. And with the development of open banking, AI is increasingly used to analyze the payment account data of consumers, which could in principle help consumers who have a thin credit history to better access credit. However, at the same time, as you mentioned, Enrique, there are substantial risks that AI poses for consumers. And as we all know, credit decisions can have a significant impact on a person's life. And credit scoring is also increasingly used as a gateway for other services in society than just lending. So for example, in the UK or in Germany, before taking up a flat, your landlord might ask you for your credit score. This means that a misuse of AI models can not only lead to financial exclusion of certain consumers, but it can also lead to social exclusion. And the outcomes of AI reflect in the end the nature and quality of the data and criteria which human beings have inserted. And this means that AI has an inherent potential to reproduce human biases, and that if it is not used within a proper framework, AI can result in major consumer harm, including discrimination, decisions which are opaque and not transparent, and in some cases also abuses of fundamental rights. And consumers can also be adversely impacted, for example, when the data used by the credit scoring model is flawed. A recent study, for example, by our UK member, which has found that 1 in 5 consumers had an error in their credit report, which is, of course, very concerning. In addition, credit scoring models increasingly use informal sets of data to establish dubious links between the consumer's behavior and possible risk of default, such as social media data, browsing history, phone usage data, or text messages. And this type of data clearly leads to privacy concerns for consumers and possibly biased outcomes. And the survey that I mentioned earlier shows that consumers are worried about these risks, including the risk of discrimination, in particular when the underlying data and principles applied are unclear. So here explainability is indeed important. And there are several recent examples of risks materializing when it comes to lending decisions. So for example, in the US, there are credit card companies which were shown to cut a cardholder's limits or increase rates when charges appeared for marriage counseling, because the person was considered more likely to divorce and therefore to have less income and a higher probability of default. In addition, our member which also notes that women on average have a lower credit score than men, and this can cost them more than 15,000 euros when taking out financial products as compared to men over the course of their lifetime. So in order to preserve consumer trust and ensure that AI truly supports consumers, it is very important for AI models used for creditworthiness assessments, but also for credit scoring more generally, to be strictly regulated and for effective supervision to be put in place. And in that regard, we welcome the fact that the Commission's proposal classifies the assessment of creditworthiness and credit scoring as high-risk activities, because this means that entities using AI for these purposes will have to have risk management systems in place, proper documentation, and they will have to ensure the transparency of operations of the model and their explainability in order to allow human control and oversight, which is very important in a democratic society. However, our view is that the Commission's proposal overall is disappointing and does fall short of adequately protecting consumers. We think that it should be improved and that additional safeguards could also be added in sectoral specific legislation. In particular, whenever a lending decision is based on AI, it is very important for consumers to have a clear right to ask for a human intervention and contest the decision. And for this purpose, lenders should have to clearly inform consumers of the procedure to follow to complain, and they should also explain what categories of data were taken into account and how a given outcome was arrived at, so that the consumer can contest it. And here again, explainability is a prerequisite, but it is not sufficient in itself. And another very important requirement for lenders and credit scoring agency is to take into account data which is only accurate and objective, and they should only be able to take into account data which is strictly related to the assessment of a borrower's repayment capacity. And all other kinds of data should be excluded, and this also includes sensitive categories of data on payment accounts, so for example, religious data or health data. And this should be ensured via independent and efficient control and monitoring by authorities. So to conclude, I hope it's about 5 minutes. AI should not be seen as an end in itself. AI is a means to achieve better outcomes for consumers and society more generally, including better lending outcomes. And this can only be the case if there is a robust legislative framework in place to protect consumers and ensure that AI, which is used in the credit sector, is fully in line with the fundamental values of a democratic society. Thank you.
I'm still writing down all the very many good ideas that you had. Just to pick up on some of those, AI needs to produce better outcomes for consumers. Is not a means in itself. It's not an end in itself. It's rather a means to empower and facilitate the life of consumers. We need robust regulation around it. And you have made an interesting point about the alignment to human values in its deployment. Okay, those were very useful points that I think will pop up later on in our discussion. I move on now to Jirgi. Jirgi, maybe we have thrown ourselves too directly into very sophisticated and detailed uses of AI. Maybe if I could tap into your academic and professorial experience a bit so that we can go back a bit to basics. What is AI? I think one of the things that we have seen is that a number of the people in the audience only have a very vague understanding of this concept. Some people don't know at all what it is. Is it the result perhaps of the evolution of traditional statistical approaches, or a kind of continuum, or is it something completely different? Are we talking about a new paradigm now? Where do you draw the line between traditional methods and new methods? And what is it that you would like perhaps to share with us in your initial intervention?
Well, thank you very much for this introduction. I like the two previous presentations very much, and the input from Deborah is definitely very useful. And maybe let me try to answer your questions in this context that we just set with the presentations and Deborah's points. So first of all, put simply, AI is the art of teaching machines to solve tasks in a similar way as we humans would do it, right? And I'm very consciously using the word art here because depending on the context, depending on the use case, on the data you have at hand, on the maybe on the domain knowledge that you have, you can use different solutions, different modeling techniques, right? And oftentimes, still nowadays, it turns out that simplicity is king, right? So, of course, we're talking nowadays about complex machine learning techniques like deep neural networks. We're talking about ensemble techniques like boosting, etc., or random forests. But oftentimes, if you have, let's say, if you don't have such a large data set, if you don't have enough labels, it turns out that simple techniques that are, by the way, industry standard nowadays, like logistic regression or rule-based systems, are still the method of choice, right? And they have advantage because, for example, in a rule-based system, you can bring the expertise. You can include the expertise of somebody who knows the domain very well, and you can make very accurate decisions by using a rule-based systems, right? If you have a lot of data, then you can use more data-driven techniques, the ones that I mentioned, for example, deep learning. You can use ensemble techniques that are more powerful, but there we, of course, need to do more about explaining, and we need to explain per use case. And this is why I like the two previous presentations, because the explanations were very use case specific, right? And at the end of the day, we also need to think about personal explanations, right? So general explanations are fine, but we need basically to explain to an end user, to a consumer, what is going on in his very specific case, or in her very specific case. And then we need to think also about the next step. So once we give an explanation, how can we help the user improve on her current state, on her or his current state, right? So next time when, for example, in the credit domain, when an application comes in from the same user, the user hopefully can get a better prediction, a more positive prediction from the model, right? And this is some of the research that we are currently conducting, or we're doing at Schufa. And one more aspect that I liked a lot from what Deborah said is the human oversight. I think this is going to be more and more important. Of course, I totally agree with continuous learning approaches, but also there we need to make sure that we have also continuous human oversight in various steps in terms of quality assurance, quality assessment. At every time point, we need to know what is going on behind the curtain, how the data is used by these models. Are we using any critical data? Is there a possibility that by combining certain input from the model, we can infer, let's say, data that is critical from a user's viewpoint? We have to think about all these things, right? And a lot of the aspects, ethical aspects, were already mentioned. We had the topic of explanations. We had the topic of bias in the data, in the labels, in the model, in the way the output of the models is used. We had the topic of fairness. So at the end of the day, we also have to think about how do we define fairness in a specific context, in a specific use case, and how do we deal with fairness in that very specific use case, right? And all of these are very important aspects that Schufa has taken very seriously in the last few years. But of course, we agree that there is more to do, and we're taking this very seriously.
Thank you for those inaugural remarks or opening remarks from your side. I like, perhaps you didn't elaborate too much when you said it, the art of teaching machines to do things that we humans do. Maybe you can explain later on in the question and answer exactly why do you see this is as an art. But let me move then first to Ms. Walsman. I mentioned at the beginning that this discussion is taking place against the backdrop of a legislative proposal already coming from the European Commission that is at the Parliament, and it is at the INCO committee where you are a member. So clearly we want to be global leaders in regulating this industry. So maybe a basic question for you would be, should we regulate AI? I think the proposal is now on the table. So the Commission has already taken a view, but what about the European Parliament? And if we do need to regulate AI, What should be the right approach to do it? What are your key messages, Ms. Walsman?
Ja, sehr geehrter Herr Velázquez, meine sehr verehrten Damen und Herren, vielen Dank für die Einladung. Ich freue mich, dass ich heute bei dieser sehr interessanten Konferenz dabei sein kann. Und einen großen Dank an die Organisatoren, dass Sie eine Übersetzung bereitgestellt haben. Das macht für mich den Austausch angenehmer. In meinem kurzen Impuls möchte ich mich auf den regulatorischen Teil beziehen und mich auf den regulatorischen Teil von KI fokussieren. Ich bin kein Finanzexperte, ich bin auch kein Ingenieur und kann deshalb wenig zu den technischen Details der KI im Finanzsektor sagen. Aber wo ich Spezialist bin, ist es die Frage, woran wir im Moment im Europäischen Parlament arbeiten, was die Regulierung von KI angeht. Vielleicht als Vorbemerkung, einige wissen es, einige vielleicht auch nicht. Die Kommission hat Ende April die Strategie für die künstliche Intelligenz vorgestellt. Das ist der weltweit erste Rechtsrahmen für Regulierung von künstlicher Intelligenz. Warum? Europa soll zu wirklich einem globalen Zentrum für vertrauenswürdige künstliche Intelligenz und damit auch soll es in erster Linie darum gehen, bei den Europäerinnen und Europäern dafür zu werben, diese Technik auch anzuwenden und keine Angst davor haben zu müssen. Und das kann man nur, wenn man Vertrauen gewinnt, was die KI zu bieten hat und dass sie von Nutzen sein kann. Die Herausforderung dieser Regulierung besteht nun darin, dass wir sicherstellen können, dass wir die Verbraucher schützen, ohne, und das ist unser besonderes Anliegen, Innovationen zu behindern. Denn Innovation und Entwicklung bringen uns voran und sichern auch den Wohlstand in Europa. Die EU-Kommission versucht dieses Problem mit dem sogenannten unannehmbaren Risiko anzugehen. Das heißt also KI-Systeme, die als klare Bedrohung eingestuft werden, klare Bedrohung für die Sicherheit, für die Lebensgrundlagen und die Rechte der Menschen, werden verboten. Das betrifft Anwendungen in einem geringen Bereich, aber das Social Scoring zum Beispiel, in dem das soziale Verhalten von Menschen bewertet wird, sie ein- oder ausgeschlossen werden aus dem Erhalt von Rechten. Auch die unterschiedlichen Beeinflussungsmöglichkeiten oder auch die Frage, wird die Schutzbedürftigkeit von Kindern ausgenutzt, wo hier besonders hohe Anforderungen auch gestellt werden müssen. Und in anderen Bereichen wird unterschieden in einem höheren Risiko oder in einem niederschwelligen Bereich. Denn eines ist auch Fakt, wenn wir alles mit gleicher Intensität in den Rechtsrahmen hineinpacken, kommen wir keinen Schritt voran. Und das heißt, das Kind mit dem Bade auszuschütten. Im Europäischen Parlament gilt es immer noch zu klären, wer jetzt federführend ist. Also es ist ein heiß begehrtes Regulierungsfeld. Ich bin aber zum Glück in allen Ausschüssen, also ich bin sowohl im Binnenmarkt Verbraucherschutz als auch im Rechtsausschuss, als auch im Sonderausschuss KI, sodass ich mich diesem wahnsinnig spannenden Feld auch in den nächsten Jahren noch sehr intensiv widmen kann. Ich will Ihnen jetzt auflisten, was ich an dem Vorschlag der Europäischen Kommission befürworte. Unter anderem auch deshalb, weil ich im Rahmen meines Berichtes zur Produktsicherheit, der ja ein Baustein für die Überarbeitung der Produktsicherheitsrichtlinie sein will, schon auch Marksteine gesetzt habe, denn dort geht es auch um den Einfluss von KI. Folgende Punkte. Ich finde gut, dass es ein Verordnungsvorschlag ist. Warum? Weil damit Rechtssicherheit in der Europäischen Union geschaffen wird. Damit wird einer möglichen Fragmentierung durch 27 nationale Regulierungen entgegengewirkt. Das brauchen wir auch. Wir brauchen keine Fragmentierung des Marktes. Denn wir wollen KI-Anwendungen auch über Ländergrenzen hinaus nutzen können. Und das nicht nur beim autonomen Fahren, sondern bei vielen anderen Beispielen auch. Auch das Wetter macht an Ländergrenzen bekanntlich nicht Halt. Der risikobasierte Ansatz, den müssen wir verteidigen, den möchte ich auch verteidigen. Also die Tatsache, dass sich die Anforderungen an KI unterscheiden, je nach dem Risiko. der KI-Anwendung und auch, dass eine dynamische Liste vorgesehen wird, also die Liste der KI an Entwicklung angepasst werden. Diese Liste wird von der Kommission erstellt werden und daraus erwachsen dann unterschiedliche Verpflichtungen eben auch für Entwickler, für Betreiber und für die Hersteller. Und ich bin sehr, sehr froh, dass es endlich eine Definition von KI gibt, die bisher auf der EU-Ebene vollkommen fehlte, die aber erstmal klar macht, worüber reden wir denn eigentlich? Ich meine, es ist eine Tatsache, das wissen wir inzwischen auch, dass KI als Zusammenspiel von algorithmischen Verfahren und der großen Datensammlungen längst in den Alltag eingezogen ist. Sie haben das, meine Vorredner haben das an den Beispielen deutlich gemacht, aber an der klaren Definition hat es bisher gemangelt und deshalb für einen Juristen, ich bin Jurist von Hause aus, ist es immer ein Fest, eine ordentliche Definition zu haben. Die menschliche Aufsicht haben Sie genannt. Ein ganz großer Punkt, dass die menschliche Aufsicht vorgesehen ist, also dass Menschen in der Lage sein sollten, in den Betrieb des KI-Systems mit hohem Risiko einzugreifen und sozusagen in übertragener Weise die Stopp-Taste zu drücken. Das ist auf jeden Fall notwendig und das ist eine ganz große Anforderung. Jetzt würde ich übergehen dazu, Ihnen die Punkte zu nennen, die für Sprengstoff bei der Diskussion im Europäischen Parlament sorgen werden. Und ich glaube, Sie erkennen einiges wieder, was wir auch schon angesprochen haben hier. Also kontroverse Debatten wird mit Sicherheit auslösen die Frage, ob KI-Anwendungen komplett durchzuregulieren sind. Also es gibt einige politische Gruppen, die wollen sich vom risikobasierten Ansatz lösen. Meines Erachtens sollten wir genau das nicht tun. Das ist essentiell, damit wir in der EU noch attraktiv für Innovationen bleiben und die Nase auch vorn haben in der Europäischen Union und nicht unsere eigenen Wachstumspotenziale ausbremsen. Und deshalb auch keine Überregulierung schaffen. Auch da neigen einige politische Gruppen dazu, da noch was dran zu setzen und dort noch was dran zu setzen, aber auch nicht den Rahmen für experimentelle Erkundung auch zu lassen. Und wir haben gerade über Transparenz gesprochen. Mein Vorredner hat das gesagt, wie wichtig Transparenz ist. Aber Transparenz bedeutet nicht unbedingt, dass ich einen Algorithmus offenlegen muss. Der gehört zu einem Geschäftsmodell eines Unternehmens. Es ist wichtig, dass die KI-Anwendung dem Schutz der Grundrechte und der Sicherheit der Nutzer gewährleisten. Das ist klar. Aber das können wir auf andere Weise auch garantieren. Bei der im Verordnungsvorschlag angesprochenen Zertifizierung oder Konformitätsbewertung für KI sollten wir auch die Balance des Vorschlages aufrechterhalten. Es wird im Europäischen Parlament sicher auch hierbei der Vorschlag aufkommen, diese Zertifizierung auf alle KI-Anwendungen auszuweiten. Auch hier werden wir gegenhalten müssen, denn wenn wir eine KI Made in Europe möchten, dann sollten wir unsere Regulierungen, unsere Regelungen auf einen Rahmen beschränken, der die sektorspezifischen Regelungen nicht aushebelt, sondern die Wettbewerbsfähigkeit zulässt und damit eben auch gerade den Start-ups den Zugang zum Markt nicht unnötig erschwert. Und was die Umsetzung der KI-Verordnung angeht, so ist diese selbstverständlich essentiell. Nichtsdestotrotz werden wir uns den Vorschlag der Kommission zur Errichtung eines Europäischen Ausschusses für künstliche Intelligenz sehr genau anschauen müssen. Dieser neue Ausschuss soll sich aus hochrangigen Vertretern der zuständigen nationalen Aufsichtsbehörden, des Europäischen Datenschutzbeauftragten und der Kommission zusammensetzen und eine wirksame und einheitliche Umsetzung der neuen KI-Verordnung ermöglichen. Nun müssen Sie wissen, dass auch hier die bereits erwähnten politischen Gruppen sich stets für die Errichtung einer neuen Behörde bzw. einer Agentur ausgesprochen haben. Wir als EVP haben das bisher versucht zu begrenzen, dass wir nicht unnötig Bürokratie zusätzlich schaffen, sondern wir haben vorhandene Institutionen, die können diese Aufgaben, wenn es denn sein muss, miterledigen, aber bitteschön nicht eine neue Behörde dafür schaffen. Und eine Kooperation zwischen den nationalen Behörden und die Unterstützung auf europäischer Ebene, das ist selbstverständlich, das muss es natürlich geben, aber auch das geht, ohne dass wir jetzt ein neues Organ, was vielleicht schwerfällig ist und neue Regulierungsebenen einzieht, brauchen. Im Sonderausschuss AIDA haben wir uns alle Auswirkungen der künstlichen Intelligenz auf verschiedene Sektoren angesehen. KI-Regulierungen sind mit Sicherheit in jedem Sektor enthalten, von der Gesundheit über die Landwirtschaft bis hin zum Finanzsektor. Und der Finanzsektor ist von diesem Prozess nicht ausgenommen und hat zwei Dimensionen der KI, die ganz besonders wichtig sind. Deshalb will ich dir am Abschluss des kleinen Impuls jetzt noch bringen. Erstens, dieser Sektor erlebt einige der am weitesten entwickelten und fortschrittlichsten Anwendungen von KI. Einige sind schon vorgestellt worden. Und gleichzeitig ist der Finanzsektor der Sektor, der die Finanzierung für die Entwicklung weiterer neuer KI-Anwendungen bereithält. Und damit möchte ich jetzt es mal belassen. Ich glaube, ich habe auch einige Anregungen gegeben für die Debatte und Ihnen gesagt, wo ich zumindest sehr deutlich stehe in dieser Diskussion, und bedanke mich für die Aufmerksamkeit.
Thank you very much, Mrs. Walsman. Certainly, you did give us a lot of suggestions and arguments for consideration. I wrote down quickly, you are in favor of a regulatory framework. If we want Europeans to use this technology, we need to provide a framework that would allow this to happen. It should be a regulation. You're fine with this idea to avoid fragmentation in the single market. You vouch for the risk-based approach. You are in favor of that too. And you made an interesting point about the definition, the legal definition of what's AI. And there are already some questions here from the audience on that topic. So maybe what I can do is I can start already picking up some of the questions and then throw those back at the speakers. There is one question that says, what if the alternative score is calculated with logistic regression and not any fancy AI algorithm? Would a statistical explanation be acceptable? I think here the question is whether the traditional logistic regression models should or should not be captured by the new AI Act and the sort of framework that sits on top of it. And it goes also back to the question of whether the AI is a significant quantum leap and something different, or is just a step in an evolution of statistical approaches. Who would like to take this one on the definition of AI?
Maybe since you already raised this question previously, and I didn't go too far into this. So from my point of view, it's definitely a continuum, right? So as I already mentioned, there are simpler traditional techniques, rule-based techniques, expert-based techniques, symbolic inference techniques, where from existing rules, you try to infer new rules. From existing knowledge, you try to infer new knowledge. There are then simple statistical techniques like naive Bayes, logistic regression. And then you have, if you start combining logistic regression models, you get obviously a more advanced model that goes towards neural networks, right? So, which is one of the most complex models that we're dealing with nowadays, right? On the other hand, having said this, a lot of the complex models that we're applying nowadays have their foundations in the early 1980s, 1970s, 1980s. Neural networks were already known back then, but with the increase of computational resources, with larger volumes of data and labels for the data, we are now able, to train these models and to learn from that data. The training techniques were already known back then. Of course, the algorithms have been refined over time. There have been developments in the algorithmic field, But as I said, so most of this is already well known and understood, right? What is coming to the front now, as we already heard also from Mrs. Walsman, is that we have to take very seriously the issues that concern the ethical issues that concern the end user, right? Because obviously the models that are being applied in various industrial fields, be it medicine, be it financial services, whatever, all these models definitely have an impact on personal lives, right? And therefore, coming back to my previous point, we have to make sure that at a personal level, we are being very transparent towards the end user. What is the meaning behind a score, and how can the user in the future take a positive, produce a more positive result from the model for his or her very specific use case, right? So this is my current view on the topic, right? And having said what the potential is, right? So we have the potential to bring the user, the end user, the consumer closer to value chains. Of course, we have the potential to come more stronger forward with the topic of digitization and digitized solutions, to scale those solutions. We have the potential to be more competitive also with countries like USA and China that are extremely strong in these fields. But at the same time, there are limitations that all of these countries are observing, right? So for example, we haven't understood, for example, simple problems like, how do you learn from few data points? How do you learn, how can you create general models if you don't have enough labels? This is what we call few-shot learning or one-shot learning. These are challenges that we have had in the past as well, right? So, of course, we have come a long way with AI, and we now need to think about how we deal with the ethical aspects. But from a research viewpoint, there are still a lot of open questions and challenges that we had in the past as well, right? We haven't solved yet, right? And we have to remain competitive on this research questions.
I'd imagine that if indeed you see a continuum, it's then an important issue. Where do you put the legislative frontier? Where do you put the scope? What elements fall into the scope of the proposal and what falls out of it? So that is a fine-tuning that needs to be done. There is a very interesting poll that looks at the risks in relation to AI that we haven't yet revealed the results of that. So maybe we could have those, because I think that would sort of give us additional food for thought, if I can see those projected here. So we were asking people, okay, we've talked about benefits, we've talked about some certain risks. Those risks have been alluded by most of you, if not all of you. And we were asking those risks, do they worry you? Do they worry you, but you think that we can handle them as they come? Or they don't really worry you because AI is such a great benefit to the human race? Or I don't know what to think. So the most voted option with 59% of the vote is, yes, those risks worry me, but I think we can handle the issues as they come. And then more or less on an equal standing, 19% of the people said, yes, those risks worry me. And 22% said, they do not really worry me because AI is a great benefit to the human race. But the majority, 60% almost, they think that those issues can be handled as they come. So can they be handled as they come? Possibly regulation is the way to go about those. And Deborah, you've talked a little bit about what you would think it's the most important elements that should fall into the AI. You have alluded also to some problems, observations that some of your members have detected, for example, certain inaccuracies in credit reports that eventually are picked up in these models, certain information perhaps more about lifestyle or about life events that eventually would lead to increase in access to credit or higher rates for credit cards. So these aspects are very important. I was just wondering whether any in the room or you guys would concur with the risks and the problems and the incidents and the occurrences that Deborah has mentioned. Is this something that in your personal and your professional experience you see often happening, that sometimes these mistakes are happening and that decisions are made on the back of data that is too sensitive or should have not been picked up by the models? the ones that develop these models, for example, what would you say on this, Federico or Mesrur?
If I can give my point of view, I think here you have first of all to distinguish about two parts. One is the data that we're using for the model, and then the model itself. Mm-hmm. So we've been talking about the model that we used. I think in that case, I mean, if we use the wrong data, even if we use a fully explainable data as logistic regression, we're going to have a biased decision. So we need to have a control on the models that we're using. In that case, I was talking about fully explainable AI because, as also Giorgi was mentioning, artificial intelligence is a continuum. No? We have a very wide spectrum of algorithms. So we need to be able to pick the right algorithms and those which allow us to go step by step. No? In the case of a fully explainable AI, it would be like a little step more with respect to traditional models. In the case of data, I think now we have the great opportunity, thanks to we're in the era of the big data, so we have more and more data available, but we have to be careful, both the financial identities, the regulator, and consumers themselves, that we use the right data. So Deborah, for instance, was making the example of open banking data. I think that's a very good example of how we can add more and more data, because that's a very powerful source, and also it can be very useful to improve financial inclusion, because I think, for instance, of someone who is new to a country, who didn't have access or didn't have the needing of asking for credit so far. So in that case, we can add more data. That also, as Giorgi was mentioning, the more data we have, the more the benefits when we use AI. But then on the other side, we have to be sure that these sources are trustworthy. That, for instance, we don't want to use social behavior or, I don't know, social media data to enter this model. So I think in this case, there is a big responsibility from all players to be sure that the data that enters the model go through a very careful control, and we make sure that they are trustworthy before we decide to need which model we use.
I think it's a good point, because sometimes in the discussion...
Vielleicht kann ich da ergänzen. Ja, vielleicht kann ich an dieser Stelle ergänzen, weil ich auch nachher die Konferenz schon verlassen muss. Die Grundfrage war ja immer wieder auch die Frage, die an mich gestellt wurde: Soll es nun reguliert werden und wie kann man eben Sicherstellungen einziehen? Und immer wieder die klare Antwort: ja, aber bei der Regulierung von KI im Allgemeinen und für Anwendungen im Finanzsektor sollte man ständig eine Bewertung der Anreize zur Innovation und Entwicklung von KI-Marktanwendungen, wie zum Beispiel die erhöhten Kosten für KI-Anwendungen einsetzen. Und diese Einschätzung ist in der aktuellen Phase des Experimentierens mit KI-Anwendungen für den Finanzsektor, glaube ich, von besonderer Bedeutung. Und der Kernsatz allgemein aufkommender Prinzipien für diese horizontale Regulierung für KI, also menschlicher Aufsatz, Robustheit und Sicherheit, Datenschutz und Privatsphäre, Fairness, Transparenz, Rechenschaftspflicht, was ich mir alles mitgeschrieben habe, ist auch mit dem ordnungsgemäßen Funktionieren des Finanzsektors und seinen sektorspezifischen Vorschriften zu vereinbaren, finde ich. Und angesichts auch der Komplexität, gerade jetzt des Finanzsektors und seiner Regulierung. Die zuständigen Finanzmarktbehörden sollten ja letztendlich auch dafür verantwortlich sein, zu beurteilen, was inwieweit die Regulierung des Finanzsektors wirklich an Grundsätzen gesetzt werden kann und wie man diese in sektorale Regelungen einbettet. Ich finde, eine solche Bewertung sollte systematisch erfolgen und ist auch dringend erforderlich. Und deshalb ist es wichtig, dass wir diese Impulse auch zusammenbringen, weil sie uns wirklich wichtige Anhaltspunkte geben. Und vielleicht als kleinen abschließenden Statement, weil ich dann wirklich auch mich verabschieden muss, ein Statement mit Ausblick und ein klares Bekenntnis auch zur KI im Finanzmarktsektor, also ein vollständiges Verbot von KI aus dem Finanzdienstleistungssektor heraus ist undurchführbar, sondern man braucht gerade KI im Finanzdienstleistungssektor. Und das würde sonst Europa auch zu einer marginalen Rolle auf den globalen Finanzmärkten machen, wodurch dann auch die europäischen Bürger eine schlechtere Stellung hätten. Das heißt, man muss die KI-Risiken bewerten, man muss sie einschätzen, man muss immer wieder evaluieren. Aber wir brauchen gerade in dem Bereich der Finanzdienstleistungen eben verlässliche Systeme, auf die wir uns verlassen können, die den Verbrauchern auch Sicherheit geben. Die Risiken müssen wir unter Kontrolle bringen. Das wird ein anspruchsvoller Job sein. Das bedeutet aber nicht, dass sie beseitigt sind, wenn AI-Entwicklung im Finanzsektor so behindert werden, dass sie gar nichts mehr bringen, sondern wir müssen eben Risiko und Chance abschätzen. Und deshalb bin ich sehr, sehr dankbar, dass da sehr viele Experten sich dran machen und das sektorspezifisch eben unter die Lupe nehmen und sagen, hier ist das zu beachten, dort ist das zu beachten. Also der Finanzsektor hat andere Anforderungen als die Landwirtschaft und andere Forderungen als der Medizinsektor oder der hauswirtschaftliche Dienstleistungsbereich. Und da müssen wir hinkommen, uns da auch ehrlich zu machen, auch wirklich über unterschiedliche Risiken zu sprechen. Und die hohe Effizienz der Finanzmärkte mit KI-Entwicklung führt auch zu höherem Wachstum. Und das bedeutet ja zwar nicht zwangsläufig, dass es allen Betroffenen und allen Teilnehmern besser geht, aber auf alle Fälle wäre es eine Behinderung und es würde verhindern, dass es vielen besser geht und dass viele ihr Potenzial ausschöpfen können. Also insofern ein klares Pro für Regulierung, ein Pro für Regulierung mit Augenmaß und ein besonderer Aspekt, ein besonderer Blick auf unsere Finanzdienstleistungen und Märkte, weil wir dort sehr weit sind mit den Anwendungen. Und dann muss ich mich leider verabschieden, weil ich in einer weiteren Konferenz spreche und Ihnen noch gute Diskussion und lassen Sie mich teilhaben an den Ergebnissen. Auf Wiedersehen.
Thank you very much, Ms. Walsmann, for your last intervention. We wish you luck in your next event. So I hope everything goes well. And thanks for being with us today. I'd like to pick up on something that Ms. Walsmann said, and also going back to this perhaps confusion between the data input into the model and the, let's say, the trustworthiness of the model in itself and the way it has been designed. Sometimes these two things get a little bit confused. So thanks for clarifying that, Federico. Ms. Walsmann was saying something that I thought was interesting. She was talking about the evaluation and going back to the risk-based approach. And the proposal of the European Commission talks very much about AI applications for creditworthiness assessments in general. And what we have seen today is particular case studies and particular applications. So I was wondering whether this assessment of riskiness perhaps should be boiled down to the level of the specific application and not so much of sector-specific approach. On that point, for example, Deborah, I think you have made a point about the financial sector or the artificial intelligence applications used for creditworthiness assessments or scoring being high risk. Could you elaborate a little bit on that? Would you see some scope for example, refining that a bit and some of the applications that for example, the ones that have been presented today tick many of the regulatory pre-requirements and are fully explainable, etc. Could this be, let's say, more of a fine-tuning rather than a broad brush approach?
Thank you, Enrique. No, I don't think we need to fine-tune. I think that there should be broad safeguards for consumers, especially when it comes to decisions which affect their individual rights. And here, lending decisions do affect consumers' rights and consumers' lives very significantly. So I think that here we should have, strong safeguards for consumers when AI models are being used to make these decisions. I think that overall, there should be consumer safeguards. Consumers should be able to understand lending decisions which are made, regardless of whether AI is used or not. We were talking about more traditional credit scoring models. Here, I think that transparency is also important. So it is not only important when AI is involved, but in general, consumers should be able to understand what data is being used to decide to grant them a credit or not, and to price such credit. But when AI is used, it is even more crucial, more important, because here decisions are made in a more sophisticated way, and lenders should be able to explain to consumers how decisions were taken, and on the basis of what data. And I don't think that we can completely, separate the question of the data and the question of the AI model, because the data is the key input which goes into the AI model. So here, consumers should be protected by regulation. I think that regulation should clearly say that the data used to make creditworthiness assessments should be really relevant to assess the borrower's repayment capacity. And then we also need safeguards when it comes to the AI model itself. So here, the model, of course, should be fully explainable, but the consumer should have the right to ask for such explanations and to object to any decisions which are based on the AI model.
Okay.
So I think
that was very clear from your side. We are just running out of time, but before we stop our discussion, I'd like to explain to you what people responded to the last question, to the last poll, that had to do with an AI system denying the consumer a loan, and people were asked to check with what of the following statements they were in agreement with. So 68% of the respondents thought that giving borrowers the right to know why a loan was denied, it's good practice. But the same amount, 68%, thought that it should be in the law. So not only is good practice, it should be recognized in the law. 13% thought that it should not be possible for the AI to deny a loan. 13% thought that this requirement would somehow limit the advancement of AI, and 6% thought that it is technically not possible for an AI system to deny a consumer a loan. So I think basically the majority of our respondents think that the consumer has the right to know, and it is also good practice that the lender communicates why the AI system decided to deny the consumer a loan. Is there anything, we're moving to the end, is there anything that as sort of key takeaway from this session, or recapping some of your key messages from your interventions, you'd like to say? Just briefly, 1 minute per person.
If I can make a start, I just want to come back very quickly on the question of innovation and the need to guarantee innovation. I think that here it is very important to make sure that innovation is not, again, an end in itself. I think that innovation should work for consumers and should be in the interest of consumers, because without consumers and without consumer trust, there is no market. And I think that it is possible to foster innovation with EU-wide rules which ensure a level playing field, which is what the European Commission is trying to do, but at the same time having specific rules to ensure a fair and ethical use of AI, in particular in the lending sector, but also more generally.
Thank you, Deborah. Federico, Sergi, Mesroor, anything you'd like to say?
Certainly give my final points. I would like to say that AI is a very good opportunity to boost financial inclusion. I think we can clearly see the benefits. We can make possible that the consumers benefit of innovation, but we have to be careful of the models that we use. So we have to guarantee to the consumers that the rights are respected, and we give them transparencies. And we use tools like fully explainable AI for everyone to understand how these models work.
Mesroor.
I absolutely agree with Deborah. I think we should have regulation without losing the competitiveness, without losing the opportunities for innovation. And overall, I think there are more opportunities in this field, in the development of AI, than there are, things that might go wrong. Therefore, we should look more at the chances, right?
Very well. Masroor, anything you'd like to contribute?
Yeah, I think there are two sides of the story. On one side, we have the technological advancements, improvements in the algorithms and the big data and so on. And on the other side, the control issue, the regulations. So we do not want to just slow down the technological advancements, but we should also be able to regulate the decisions of AI. And so AI should be transparent and we should be able to trust AI, as we all talked about. And so in this case, the explainable AI will be probably the most important feature of artificial intelligence, because unless we have explainable AI, then we cannot understand the models and then we cannot regulate them. So basically, I think the most important part in these technological advancements will be the explainable AI.
Okay, I think we are on a good track on the explainability of AI models, as we have seen today. I need to apologize to the audience because there are some questions left in the chat. If you agree, I would sort of distribute those questions to my fellow panelists and try to collect responses, and we will then connect to the participants so that they can have their response. Thank you very much to you for illuminating this debate. Thank you very much to the audience for their questions and for their participation. We are coming, this is in fact the fourth and last session of the ACCIS Conference. So thank you very much to all of the ones that have participated in previous session. It was, I hope, a very useful conference for you. Next year, we will see each other in Brussels. Our member, the National Bank of Belgium, has very kindly invited us to use their auditorium. So hopefully by then we can have a face-to-face conference, and it would be great to see you and perhaps many other people next year. So bye from my side. Thank you to QED also for having supported this conference, and see you in 2022. Have a great day.
Thank you.
Thank you.
Thank you.